Hi, this is PR Sundar. Welcome to Post Market Report sponsored by Delta.Exchange. Who would have expected Nifty to close below 23,500 today? Yesterday, the Nifty high was 23,869. That's almost 23,900. And today, it has broken 23,500, which means that it's nearly a 400 point fall. So this is the danger of a vertically moving market. Nifty moved vertically around 1,800, 1,900 points, vertical rise, every day 300 point. Yesterday, there was the first sign of profit booking. But though there was a sign of profit booking yesterday, but the Nifty closed positive. But today, Nifty also came under selling pressure. Except auto index, which was slightly positive. All other indices were down today. Mid cap, small cap, next 50, all down for second straight day. So the last 1.5 months was very difficult. February series started around 23,200, went to 23,800, then fell 1,800 point. So that means it was about 2,400 point swing. Then from there, markets went for short covering. At 23,800 was taken out on the higher side. So which means that in February and March series put together, first Nifty went up 600 point, then came 1,800 point, again shot up 1,800 point, again came about 400 point. So that is nearly, a 5,000 point swing. So that is roughly about 20% swing in a matter of 2 months. But if you are looking at technically a little bit, you can judge the market. So I said today morning very clearly that yesterday's high should be taken out for the bullish view. Otherwise, this is just going to be a consolidation. But this is a very, very violent consolidation. In fact, I did not expect Nifty to close below 23,500. Given the bullishness in the global markets and other things, in fact, today, GIFT Nifty was indicating 80, 90 point higher opening, but Nifty closed about 200 point lower. So that's from intraday high to low, it's a fall of about 300 points. So I told you already, even for investors also, what happened in the last few trading sessions, last 6-7 trading sessions, this is just a pure short covering rally. This is not fueled by fresh buying. The people who had shorted, so they're covering their shorts. As I told you many times, and bull market do not work like this. Bull market move will be gradual and 2 step forward, 1 step backward, and slowly. That will give chance for everyone to participate, everyone to make money. But this violent move on the higher side will always be followed by violent move on the downside. If you can remember, first time when the Nifty fell in last October, it fell from 26,300 to 23,300. That was about 3,000 point fall. What happened in the next few weeks? A 1,500 point rally came. Fall was 3,000 point, rally was 1,500 point. Again, what happened? So that entire 1,500 point recovery was sold into 23,300 broken. Then it fell another 1,300 point. So that is how the markets work. So as long as nothing happens in US, we might consolidate. But if there is any Trump tariff, April 2nd, that can give some kind of a jitterness to the market. So looking at the open interest, so as expected, there was a huge unwinding of put options, 23,800, 23,750, 23,700. So up to 23,550 put options, there was a huge unwinding. And 23,500, still people are holding with some kind of a hope. But people started selling call options aggressively. So 23,500 to 23,800, there is an aggressive call writing. So the bull market that for the last few trading sessions, I think now it might be fizzling out. The best thing we can hope is a consolidation between 23,500 and 24,000. And if the previous high, that means yesterday's high, 23,869, if that is taken out, then we can be sure that so this rally may continue. Otherwise, this can go for consolidation or with negative bias or positive bias, depending upon the global cues and what the Trump is going to speak. So let us see what is going to happen tomorrow. Since I'm having some other work, so I could not shoot the video. So therefore, I'm just doing only audio podcast. Hope you enjoyed listening to this audio. Thank you for listening.